Madam, start.
ठीक है. If possible, I will log on.
You are online. Start, madam.
Good morning, dear
Start.
students. I am V.Shivaranjani, Junior Lecturer in Commerce at T.S.R.J.C. Hasanparthy. Today I am going to teach you the second year Accountancy Unit 1 Depreciation. Before entering into our topic, I would like to explain in briefly about our total syllabus. So, why do we study commerce and accountancy? Because you chosen that subject, you are the commerce student and future business persons and entrepreneurs and chartered accountants. So as a commerce student, you must know all the basic concepts and how to maintain books, and how to record transactions, and how to prepare final accounts of different organizations to know whether the business organization is getting profits or loss, or whether they are using resources properly or not, whether to know the financial position of the business. So in your first year accountancy, you have gone through what is accountancy, principles of accounting, how to record business transactions, how to prepare subsidiary books and BRS trial balance, and how to prepare final accounts of sole trade concerns. Now, in your second year, you are going to learn about depreciation. So, in first unit, you have depreciation. What do you mean by depreciation? Depreciation is nothing but decrease. So, what do you mean by depreciation? Meaning, significance, and causes of depreciation, methods of depreciation. You will learn in your first unit. And next, second unit is consignment account. What do you mean by consignment? See, every business concern or business person want to expand their business so that they expand or open branches, network of branches in many places. So process of this opening branches and doing business is called consignments. In this chapter, you will learn meaning and significance of consignment, difference between consignment and sale, terminology used in consignment accounts, and valuation of unsold stock, loss of stock. So in third unit, you will learn about accounts for not for profit organizations. See, there are two categories of organizations. One is commercial and non-commercial organizations. So commercial organization main motive is to get profits, and non-commercial organizations motive is to serve its members and to reach some social desirable goals. So in this chapter, you will learn meaning of not-for-profit organizations and characteristics, difference between capital and revenue expenditure and receipts, and difference between receipts and income payments and expenditure. In this chapter, not-for-profit organizations will not prepare profit and loss account because it will not work for profit or loss. It will work for society. So they maintain receipts and income, payments, and expenditure account. And next, fourth unit is partnership accounting. What do you mean by partnership? If two or more persons, next, if two or more persons start a business, it is called partnership. So, what is the reason for start a partnership? So, mainly to eliminate the limitations of sole trading business organizations. A new form business organization is emerged, which is known as partnership business. So, in this chapter, you will learn meaning of partnership, definition, partnership accountings, and fixed and fluctuation capital, final accounts and admission of the partner, retirement of the partner. And next, last unit is accounting standards. What is accounting standards? See, accounting standards is nothing but rules and regulations. It will reduce the time and it will minimize the work, and it will improve the efficiency of the organizations. In large organizations, it is hard to maintain lot of transactions in manual. So if you use computers, it will be easy. But there are some disadvantages. You will learn in this chapter meaning and features and advantages, limitations, comparison between manual and computerized accounting system, types of accounting software. So these are the 5 units you have in your second year accounting. So next we will go through our first unit, depreciation. So what do you mean by depreciation? In this chapter you will know the following aspects. First you will learn the meaning of depreciation, and next you understand the basic terms of asset depreciation, its significance or need for providing depreciation, its causes of depreciation, how to apply straight line method of depreciation, how to apply reducing balance method of depreciation, and other methods of providing depreciation. You will learn by the end of this unit. So first we will see what is depreciation. So here you can see what is depreciation. Depreciation is a reduction in the value of an asset over time. What is an asset? See, whether it is small business organization or large business organization, sole trading, a partnership or a company, to make production and distribution, they need some assets, right? Business is a continuous process of making production and distribution. So to making production and distribution, we need some land for construction of buildings, some plant machinery to make production, and to marketing that this goods, we need transportation vehicles, and to purchase raw materials, we need cash. So to meet all the goals, to meet our commitments, we need some materials like buildings, machines, or cash. So these all are, you can see that assets mean acquired or purchased and owned, having value and available to meet debts and commitments or legacies. So if any organization wants to meet or start a production, they need some land, machinery, and cash, right? So these all are called as assets. Here we can see two types of assets. One is fixed assets and current assets. Fixed assets means purchased for a long-term use and are not likely to be converted quickly into cash. For example, if you want to buy something immediately, you have only land. Can you sell that land immediately? Can you convert that land into cash immediately? No, you cannot convert that land immediately. It will take some time. So if you have cash, you can buy that product immediately. Or if you have bank balance, you can draw that balance and you can purchase immediately. So fixed assets means we cannot convert quickly into cash. But current assets means, for example, cash, bank balance, deposit, inventory, raw materials, we can easily convert into cash and we can buy something. So these are the assets we have, fixed assets and current assets. Both are very important in business to produce and marketing the goods and services. So what will be decreased? The value of an asset. How it will be decreased? We will see. First we see meaning of depreciation. See here, depreciation means a fall in the value or quality of an asset. The word depreciation is derived from the Latin word depretium. D means decline and pretium means price. It is the decline in the price or value of fixed assets. If you say anything in terms of value, we can say that in price. For example, if we ask how much, what is the value of that building, we will say that 10 lakhs, 20 lakhs, like that, right? So always we say the value in terms of price. So we can say the depreciation meaning that fall in the value or quality of an asset. So why? So depreciation is described as permanent, continuing, and gradual shrinkage in the value of fixed asset. It is based on the cost of the asset consumed in a business. So if we purchase a building after some years, it, we have to make some repairs, right? And if you purchase a car and machinery, it will we should make some repairs to that machine. And if you want to again sell that car, we cannot get the amount what we spent while buying. Right? For example, if you buy a car for 20 lakhs, if you want to sell it again after 1 week or 2 weeks or 1 month, you won't get that 20 lakhs. You will get definitely some less amount. So here we are getting some less amount, that is called decrease, decrease in value. Okay, we can say that depreciation means a fall in the value or quality of an asset. So what are the reasons for decreasing in value of an asset? Are there any reasons? Yes, here we have some reasons. See, so many reasons are there: wear and tear, depletion, accidents, obsolescence, reflection of time, passage of time, fluctuations. We will see one by one. See, the main reasons for causes of depreciation are the previous wear and tear. That means by continuous using of a product or a machinery or a building, that value will be decreased, right? For example, if you buy a car or something, you will use we will use continuously, and machinery we will use continuously to make prod production. So in that way, if you use continuously, that will the value of that asset will be decreased. So this is the reason for depreciation. And next, depletion. Depletion means reducing in number. That means reducing in quantity, right? For example, if you make a book or if you produce something, you need raw materials. If you want to make production of books, you need wood, right? So that we use trees, and next we use fuel, we use electricity, like that. So if you use continuously, the quantity or number of the products will be decreased. So it is called depletion. So it is the reason for a decrease the value of a asset. For example, resources like minerals, extraction of raw materials, mines, quarries, oil wells, right? So here the quite difference is there. Depletion and depreciation. Depletion is about quantity and depreciation is about quality of an asset. Next, accident. Accidents are also some of the reasons for reduction in value. If a vehicle or anything met with an accident, it will be breakdown. So it will lead to decrease in the value of an asset. Next, obsolescence. Obsolescence nothing but the time passes, it become outdated due to new inventions, technological improvements, availability of better type of assets, or change in market demand, existing becomes obsolete. For example, invention of computer leads to or replace the typewriter, and land phones to smartphones, smart TVs, like that. New inventions are the causes for decrease in the value of some assets. And next, reflection of time or passage of time. So here we can see that reflection of time or passage of time means we have patents, copyrights, or leasehold bondings for fixed periods. After that period, after completion of that period, it will be outdated. So then it will be lose their value. Like that, the passage of time also reduce the value of an asset. Next, fluctuation. Fluctuations means changes. Changes in market demand and supply. These are the main reasons for the change of an asset. Right. Demand. One product may get more demand now, and after some days it will not get more demand. Like that, changing market situations, the product loses their value. Okay. So these are the reasons for uh, decrease in value of the asset: wear and tear, depletion, accidents, obsolescence, reflection of time, and fluctuations. Okay. And next, what is the need for preparation? Depreciation, providing depreciation. Are significance for providing depreciation? Is there any significance for providing depreciation? Yes. See, to ascertain the true results of business operations. So the main motive of any business organization is to know the true business profits or loss. So in final accounts of first years, we have seen that the value of the asset we entered in the final accounts after reduction of the depreciation. Then only we can know the absolute profit or loss. Otherwise, if you enter the asset value without the reduction of depreciation, it will show more profit than the actual profit. So to ascertain, to know the true results of business operations, it is very important to calculate the depreciation. And next, to show the fixed assets at their original worth in the balance sheet. To know the original worth, for example, if you buy a motorcycle for 1 lakh, after 5 years, it will lose their value. Right. If you show the same 1 lakh in the balance sheet even after 5 years, it is not its original worth. Right. If you will sell that product, you will not get the 1 lakh. So if you want to show the original worth in the balance sheet, it is very important to consider the depreciation. And next, to provide funds for the replacement of asset. See, like other expenses, we are for purchasing raw materials or to purchase anything for business, we spend money that we can see. But here, depreciation is a unseen expense or loss. So here we can provide the reserve for depreciation to replacement the asset. For example, if a machinery purchase for 10 lakhs or something, every year we calculate the depreciation and that will be debited to the profit and loss account because it is a loss for the business. Or we can maintain the reserve, depreciation reserve to replacement the asset. So for this also we need to provide or we need to calculate the depreciation. And next, to ascertain the true cost of production. Cost of production and market value both are there, right? Price and cost are different. The cost of production include all the raw material cost and everything. So to ascertain the true cost of production, it is necessary to charge depreciation. Otherwise, it would not present the true cost of production. If you buy a book in market, for example, rupees 10, it includes the cost of production like transportation, raw materials, and everything. Right. So to ascertain true cost of production, we should consider the depreciation and to follow the legal provisions. In case of joint stock companies, and it is compulsory to provide depreciation on fixed assets. Without providing depreciation, it will not show the actual results of the business organizations. So these are the some important views to calculate the depreciation, right? So these are the topics we discussed in today's session. That is meaning of depreciation and the causes of depreciation and need for calculating depreciation. Okay. And next we have two methods in depreciation. How to calculate depreciation? We have two methods, straight line method and reducing balancing method.